Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today the 5th of July, and I hope your Independence Day holiday has passed well around your family. Well, now let's try to return to our business. So, let's continue with the euro currency. There is not much has changed during the previous trading session because the trading market was really thin yesterday. But still, something we could see currently. Well, during our discussion on the previous week and then in the weekly thread, we said that still, since the market stands above that target and above these highs, okay, above the monthly pivot point, that probably this leg could be extended. CD leg of this ABCD pattern and that Gartley's 222 pattern will be extended. So that has happened. When the market on Friday has formed this highway pattern, we've said that probably market is ready to change direction or something, because this pattern tells us that market indecision. It's really, let's take a look, that market has hit 786 resistance target and just pierced it just for accomplishment of 127 target from that ABCD pattern. So you can see market has touched it, accomplished this target and returns right back. Okay, now looks like the retracement that we have waited for and we have discussed in our weekly thread now has started, and there are a couple of areas to watch for as potential area to buy. First area is right here, 144.7 in the terms of futures quotes. This is monthly pivot point and the previous swing high. The next area, and is most preferable for the potential entry on the long side, is that area. Weekly pivot point 143.56 and FIB support 143.65. So that is some constellation of different supports levels. You can see that trend is bullish, so our current environment on the daily time frame is bullish. Still, we have that Gartley 222 pattern, and from the one point of view, this is the bearish pattern and tells that about the possible continuation to the downside. But if we take a look at the development of this pattern and on the picture weekly and monthly time frames, well, I do not very believe in the continuation of this move to the downside currently, because this price action makes me think that it's not very, say, bearish. Okay, so probably market could show some deeper retracement. Maybe it will break that area to the downside, maybe it will reach 618. Currently it's very difficult to say it, but in general now I think that the bullish side of the market is stronger than the bearish, and probably this larger butterfly that we have discussed on the daily time frame will be realized. Still, we will move through the our trading plan with our trading plan day by day. So for today's trading session is two areas to watch for, 144.7 and 143.50 roughly. It's right here. Okay, now let's shift to the 4-hour chart. You can see the trend has turned bearish. Price action also turns bearish. Also, as you remember, we have discussed that market before turning to the downside will has to touch that area. This is target from that ABC pattern, 1618 target, and I said when the market stands very close to that target, then probably it will hit it before any reversal to the downside. That has happened, and that was the bearish divergence on the hourly chart, as you remember. We will take a look at it a bit later. And I said that it's very dangerous to rely only on the divergences, and why I do not rely on it very often. So that has happened. That you can see the excellent example of the public trap that market makers very often use when some target stands very close to some swings highs and the market formed the divergence. Public entry on the signals was placing stop just above the highs of the divergence, and market makers hit it using the market power that is gravitates to that target. Okay, hit the stops of the public and then release the market continue move to the downside. That's happens very often. Now, what do we see here? First of all, although yesterday trading session was thin, and I think that it's better to wait some more reaction from the normal market that could be formed today. Okay, because yesterday although this is sell-off looks nice, well, in general this has happened on the thin market, so probably we should see for some further development. But in general, you can see that down move is really stronger currently, so we could expect some deeper retracement on the lower time frames. On the hourly chart, as you can see, that is divergence that we have discussed. Okay, that's hitting all that target that we also have discussed. Now let's take a look. Some retracement like an ABCD move development to the downside. Trend is bearish. You can see that market accelerates really hard from the 618 to 100% extension. This leg is much steeper than AB move. CD move is parallel line to the AB. Okay, you can see that this angle steepness is greater than the AB move. It tells us that probably market will show deeper retracement, deeper move down. So the next target stands right here, 141, 1618 target, 144.7, right in the area of the monthly pivot point. That is also the previous highs, as you remember. Oh, now I will show you on the daily time frame. That's highs. You can see that 144.7 also here. Well, the next area to watch for is right here. So if you will see that market accelerates something like that to the 618, then do not enter on the long side of the market. It will tell us that probably market will show a deeper retracement. The next area, and my preferable area, is right here. This is the hourly confluence support, 143.48, 143.65, and weekly pivot point, 143.56. From the probability point of view, the touching of the weekly pivot point is very probable, because market usually trades weekly pivot points in the 70 and 80% of cases. That's why this is some kind of magnet for the market, that market should test it and decide, establish some sentiment, and probably either move to the upside or to the downside. Okay, if it's bearish to the downside, if it's bullish relative to the upside. Well, and that area give us more, is better price to enter and has nice probability to give us nice probability to enter at all. Well, how we could enter in general currently? Well, currently we do not know. Will market stop right here, because this is also the previous highs, and the breakout of that area, that range between that level and that level, will be not very welcome for the bullish scenario, because moving below the highs of the B point, moving below that strong area of supports and below weekly and monthly pivot points will tell us that probably some changing sentiment has happened. Well, that's why from the bullish point of view, market should hold above that area. It could flirt with it, it could show some fast penetration, fast return, but in general it should hold above it. That's why we could place stop somewhere below that area. And I think that probably 40 pips below that area will be sufficient if we will try to enter from that point. Well, I see two different ways to enter. First way to enter is probably wait accomplished with 144.7. Try to buy from that area with the small volume of the position. Market in general should show some respect to that area. When it will happen, you can try to place the stop to break even. If market will jump out from that area for the 20-30 pips, I think you can try to place stop to break even. If market will break it to the downside, well, you lose nothing, and probably we will wait for that area to enter on the long side of the market. The same way is we could apply at that area. Market will hit it, we could try to enter, place stop to break even during the respect. Or you could wait some, for instance, some patterns to enter. If it will be, for example, reverse head and shoulders, maybe this could be some butterfly buy pattern, okay, or something. Then you can use these patterns to place stops and to enter. This is the aggressive way to enter. The conservative way to enter is to wait when the hourly trend will turn bullish after reaching that area or that area. If market will, for instance, will reach that area, shows some consolidation, some patterns, and starts to accelerate into the upside, when the trend will turn bullish from the hourly chart, you can use some shallow retracement to enter. For instance, market shows some initial wave to the upside, initial thrust to the upside. You can wait for some shallow, for instance, 382 retracement from that initial pullback from that area with enter and place stop somewhere or below some deeper fib support or below the swing low, wherever it will be. Okay, that's the conservative tackle, because in that case you enter when the hourly trend is bullish and daily trend is bullish, so both trends on your side, and it will give you, for instance, place tighter stop, but maybe you will lose the better price to enter. So the choice is up to you. Will you apply the aggressive way to enter or conservative tackle? This is anyway, you should have the place the stop loss. Well, if market will not show any buy patterns in that area and that area, well, in that case we will discuss the situation on the tomorrow trading session in the morning, and we will decide what to do next if our scenario will not be realized by the market. But that being said, on the current trading session, the two areas to watch for, 144.7 and 143.50 area roughly. What strategy to enter is apply is this choice is up to you. Just use the tools that you most like and that's work best for you.